What's going on, guys, and welcome back to another video. So with all the panic selling over the last few weeks and a lot of people nervous about their positions that they hold, I want to discuss 5 different reasons why you should not be worried and why you should continue to invest in the US stock market. So I know this is a different video to what I usually do, but as the stock market is opening again in the morning, I feel that this video is well needed for people if they are kind of considering selling their stocks. So I hopefully at the end of this video you'll kind of be a bit more optimistic about keeping your investments. But just before we get into all of that, can I please ask, as always, if you're new around here, to consider subscribing to the channel, as we're currently just 50 subscribers away from our main goal of getting to 1000. And with all that being said, let's get into the first point. So the first point that I would advise is it gives a great opportunity to dollar cost average. So if you've seen any of my prior videos, one of my main premises or focuses around investing is to dollar cost average and take advantage anytime some of my blue chip companies go into the red. So over the last 2 weeks or so, my overall portfolio has went down about 4.5%, and a lot of people now would be worried. However, in my opinion, this just poses great opportunities to get into stocks at a cheaper price. So yesterday I made the example of if a stock cost €100 originally, and now it's after going down to 80. So if you bought one stock at 100 and the other at 80, you now have an average price of 90 instead of 100. So if you're a long-term investor, this is definitely a great opportunity, especially if you're investing into blue chip well-known companies, as the stock market is cyclical, so it always has to go up and down in value. So I feel this is a great opportunity to take advantage of some of these stocks and drip feed some of your cash reserves into these stocks, which effectively in the long term will give you a better overall profit. Just as an example here, we can see on screen I currently have about €7,300 in my portfolio. However, last week I deposited a further 500, and we can see at the moment we have €100 free reserves, which meant I put a further €400 in on Thursday and Friday, and this was, as I just said, dollar cost average and take advantage of some of these dips. So certainly as a long-term investor, this is great opportunities to get in at a cheaper price, and I think in the long term you'll be happy you've done so. Second reason is a psychological reason, and that's due to a thing called pent up demand. So for example, as you can imagine, if you're like myself or anyone else, you'd be probably sitting at home a lot more than you used to over the last year or so. This poses great opportunities, firstly, to save a lot more money. For example, before, let's say I got €100 wages, just as an example, I used to only save about €10 out of that. However, now I'm saving about 60 to 70% of my wages per month, and that's mainly due to not being able to do anything with it as such. Obviously, I'm saving for a house as well at the moment, and we're getting married next year. But even if we weren't doing all of that, I still would be saving that amount or percentage of money, mainly due to the fact that there's nothing we can actually do. So I feel like I wouldn't be the only one that is in that position as well. The majority of people have a lot more savings and cash reserves ready to go for when the economies do start to open properly again. And also, as probably the prime example would be going on holidays, a lot of people might think that the holiday industry, such as, just as an example, let's say Boeing with their aircrafts, a lot of people might think they might take years to recover. However, there's going to be such a built-up supply, or demand, should I say, that in the long term, or even short term, should I say as well, that they're going to be straight back into business and doing better than ever because of so many people, for example, want to go on holidays. Before, in a normal situation, for example, you could go on holidays between, let's say, May to August or even September. But now I have a feeling the second that the restrictions are lifted, people are going to go on holidays as often, as much as they can, because firstly, they have a lot of built-up savings that I just mentioned, and second of all, because of this pent-up demand. And it's not just these prime examples of pent-up demand, such as going on holidays, they have other impacts as well. For example, just very briefly, let's say you want to go on holidays, well, there's probably a bigger chance of you buying a Coca-Cola, for example, if you went on holidays on the beach, than if you were just sitting at home. So there is great opportunities as well, such things as sunscreen. Again, I'm only using holidays as just a brief example here to put through my point, but it has such a knock-on effect across different industries as well, which will also boost the overall economy. The third point I want to briefly mention is the Johnson & Johnson single jab for COVID-19. Now, originally, such companies as Pfizer, they have been having 2 different jabs that you had to take in intervals over a few weeks, which obviously slowed down the overall process of getting everyone fully vaccinated. However, because Johnson & Johnson's single jab is after being cleared by the US, again, it has to go through the kind of governing bodies. It's still in that process. However, if that gets cleared, which I imagine it will, so it's going to really up the ante in terms of getting everyone vaccinated, which will effectively open the economies even faster. So that's only going to be of added benefit because it's literally cutting the time in half and also doubling the numbers of people that can get vaccinated at any given time. The fourth point that I want to briefly discuss is the stimulus check of $1,400. Now, this will be the third stimulus check, and this effectively in the short term will help with some quantitative easing and economic relief. So obviously by pumping more money into the market in the short term, this will be a benefited gain. However, this could also counteract and it has to be paid back eventually in terms of taxes. So taxes could go up in value as well over the coming years. But for the time being, this could be of benefit in the short term. Obviously, it might have an impact in the long term as well, but there'll be other reasons and other situations that could counteract that as well that I'll discuss in a different video. But in terms of this 1400 stimulus check, this will only be of benefit to the overall economies in the coming months because this will help to reopen the economies, and it also gives consumers some extra additional capital that they can spend, which will effectively improve the overall economy. Obviously, there's a lot of pros and cons for stimulus checks and other such economic relief strategies. However, in my opinion, I do think it's needed to keep the economy going because if these stimulus checks weren't actually given out, there'd be a lot more people really kind of keeping on to whatever few dollars they actually had, which could be disastrous in the long term as well because a lot of smaller businesses would end up closing. So effectively, actually giving this stimulus out at right now will actually be of benefit in the long term as well. The fifth and final reason, which is probably the most important, is we've been here before. So even this time last year in, let's say, February or March, we can see as a prime example here, Bank of America dropped to about $12 or even $11 a share at the time, and everyone thought this was going to be the start of a real economic downturn and like the bear markets were going to start for many years in a row. However, we have been here practically the exact same thing this time last year, and look what happened. A lot of people were saying and panic selling their stocks. All right, this time around, even though it's February at the moment, the year after, so 11 months since, it obviously hasn't had such a drastic effect in terms of the stocks, but a lot of people are panic selling because they do believe, a lot of people believe that it's going to go down to these levels again, but I don't think it will in my opinion because people have been here before and they know how to react with this. A lot of people have made a lot of money on this crash. Obviously people have lost money as well, but the people that actually didn't sell and bought further in, which backs up my point that I mentioned earlier of dollar cost averaging. For example, if you bought in here at $12 of Bank of America, which is a well-established bank within America, it's currently $34, so it's nearly after gone up threefold over the last 11 months. And over the last year, if we just click here, for example, it's after going up 13.29% within the last year as well. And it's not just the Bank of America as well, it's literally 90 to 95% of companies over the last year that had an extreme dip in March of 2020 and have since recovered time and time again over the months and are back to all-time highs. So another point as well, it kind of goes in with dollar cost averaging, and as well with this point is that the markets are cyclical and that a lot of companies were overvalued. So by having this market correction, it's bringing a lot of companies back to the true value, which is actually of very added benefit to the market, and it needs to be. Stocks can't always just go up in value because the market has become hyperinflated, which actually is disastrous in the long term. You can see this in such markets as the Chinese and Japanese markets a few years back and how disastrous of effect that had. So markets have to kind of have their true value and they have to come back to their fair value time and time again, and that's what happens in a healthy market. And with all that being said, that brings you into today's video. I just felt on a Sunday evening that this type of video was needed. We discussed 5 reasons why I believe you shouldn't panic sell and be optimistic about the stock market in the long term. Such examples were the Johnson & Johnson one jab. We also had a look through the Pent Up Demand, the stimulus checks, and so on and so forth. So I gave 5 reasons throughout this video of why you shouldn't panic sell and why you should continue to dollar cost average and move forward. As a long-term investor, this is actually a very good opportunity to make big money in the long term. If you found this video anyway helpful or useful, it'd be brilliant if you consider subscribing to the channel if you're new around here, and it'd be much appreciated if you could like the video as well. And as always, most importantly, if you have any questions, comments, queries or suggestions, please don't hesitate to comment below and I'll be sure to get back to you as quick as I can. Thanks very much guys, enjoy the rest of the weekend, and I will see y'all in Monday morning's video.